It does seem to be this almost perfectly inverse relationship between the equity market and the oil and commodity markets. What do you make of it?
Yeah, I mean, we are absolutely talking, even during earnings season, which is now largely over, but we were, definitely talking more about energy and geopolitical issues, and that is ruling the day. And I guess it goes without saying that every company is, a user of energy and is a customer of a utility. So yeah, it makes sense, and it's hard to see where things go. I mean, I think we always have thought about energy and the availability of it in this country, but I think we never really thought that, we're still subject to, world, prices. It's a global market, and we have to live with that.
Is that really, you think, just due to the fears of the consumer just getting crushed at the gas pump? Nothing really perhaps has as much of a daily impact on so many Americans as the price of gas, just the fear that consumer inflation is going to crush the consumer, corporate earnings, and therefore hurt the stock market? Or is it something totally else?
Well, I mean, I think that's right. I think the headline about the absolute price of gas is daunting, $3, $4, $5, depending on where you live. Adjusted for inflation, people like to point out that gas is no more expensive now than it was maybe 10 or 15 years ago. But I think regardless of what that number actually is, I think that people just see the headline. I think that where the rubber meets the road, as it were, would be more in Europe. And so certainly this is a big global economy that is interconnected with the United States, and economic growth is at risk. And obviously that really comes into stark relief in Europe, where they are spending a lot more on power and energy than we are here, even though we are also spending more. So
no, Europe is getting crushed. They're paying about 5 to 6 times what we are. We've talked about it extensively, Josh. It is a very dire economic scenario in Europe. Let's leave you with some picks here if we can, because one of the stocks that you like is a name well known to our viewers. I've interviewed their CEO many times. It is Tellurian, the liquefied natural gas producer. They just announced they're going to start construction on their new Driftwood project. They don't have full financing yet, but they're going to start. Listen, it's a very interesting trader favorite stock. It's up 80% in 90 days, but that apparently not scaring you off. How come?
No, and absolutely. I mean, yeah. So Tellurian, is a holding in the our Hennessy Gas Utility Fund, and so Cheniere gets a lot of attention, which is also a holding in the Hennessy Gas Utility Fund, as well as in our Hennessy Energy Transition Fund. But I would point out Tellurian is more of an early stage name, much smaller market cap. I believe it's just shy of $3 billion, and it's an integrated, kind of upstream, midstream, and downstream provider of liquefied natural gas. So they own, some assets in the Haynesville Shale Formation, Driftwood pipeline asset, as well as what you mentioned, which is the Driftwood LNG exportation facility in Southwest Louisiana that should be getting going. Phase 1 is set to start relatively soon, which they announced earlier this week. And certainly if someone believes that geopolitical worries are over and that there will be no more energy insecurity on a global basis, then this might not be the name for you. But certainly, as you know, and you've reported on quite well, I mean, this is here to stay. And, liquefied natural gas, the exportation of it, the use of it overseas, as much as we'd like to believe that we can renew our way out of this with wind and solar and all of that, it's just not going to happen.